Funko Pop, the popular toy brand and consumer-facing good, is facing some trouble as it's potentially facing bankruptcy even in the next year as debt increases and net income is not in a good place right now. So this is Funko stock analysis. If you're a fan of Funko, let me know in the comments and what you think of this stock. But getting right into it, there was a piece here from Brew Markets that came out yesterday about how basically the parent company is finding out the hard way that Funko Pop collectible figures aren't worth as much as you think. In its recent earnings release, Funko revealed that there is substantial doubt it can continue running the business, and for the next 12 months they're going to be weighed down by over $200 million in debt, which is especially tough to pay off in a consumer product business where your net income is plunging 80% year over year to literally less than $1 million last quarter. So this is Funko Pop, what they do and where it could be going in the next few months. If you're not familiar with Funko Pop, this is the website here. It's just these action figure type collectibles that partner with big IP brands like the NFL, like Marvel, pretty much every TV show and movie on the planet you see. They're either doing a pop with a famous pop artist, and if you're not familiar with pop, they used to go for like $8-10 a piece, and they've kind of steadily risen over time. And you can see it on their website. What they're pushing hard is these kind of calendars, and they're not even really pushing the actual collectible figures. They're trying to push these kind of more expensive units here. I don't know if that's a strategy they didn't outline in the earnings call, but we're going to go into that. We're going to go into what happened on earnings, where the stock chart's looking like, and kind of what these big Funko Pop fans are saying from a community perspective. Something that is promising though is you use SimilarWeb to kind of analyze what the web traffic looks like, and this isn't always 100% accurate, but their web traffic is increasing in the last 3 months. You can see October about 6 million web visits compared to August and September about 4 or 5 million each. So the web traffic in the last 3 months isn't declining, which is good to see, and they have a long average visit duration. You can see about 3 minutes, 5 pages per visit. That's actually very good from my experience of looking at websites like Funko's. So that's going to be the web traffic. And then kind of getting into where this stock is, they are really in a tough spot because they're down 77% in the last year, and they did come out with an earnings call for Q3 where they had $250 million of revenue versus analyst estimates of $262 million. So they missed it by about 4%, and that's down 14% year over year. So revenue is declining. They did beat on adjusted earnings per share, and they did beat on adjusted EBITDA, which would be 24 million versus analyst estimates of 15 million. So that's good to see, but it's, the thing with adjusted metrics is they can kind of massage that numbers. That's why it says adjusted. So I'd be interested to see how adjusted that looks like, And so their operating margin is down 2.6%, and market cap is currently around 200 million. So they kind of saw a positive reaction in the markets after this earnings call, despite the revenue falling 14% year over year. And the management got on the call. They answered a lot of questions about kind of what is the future of this company. Is bankruptcy coming? What's their strategy to get them out of this hole? And we will get to that here in a second. But I thought it was interesting to go and look at the Funko Pop subreddit, where they have over 200,000 members. And this is a photo about how basically Funko might not survive another year, and how the Reddit members, these are the diehard fans, right, are reacting to that. And you can see some of the comments here. Basically, they said that they would focus on smaller product lines and things like Pop Yourself, which I'll show here in a second, blind box collectibles and things like that. And you can see the negative sentiment just in these posts, like this person saying they've learned nothing if this is their strategy. Overproduction of things no one wants and making it impossible to get the items people do. That's another reason they're in this hole. And then finally, this is a Funko Pop lover of 10 years who's basically saying they've messed up on so many fronts. They've partnered with too many brands, too many of the same pops, and basically they're getting away from what made them, and they're getting overextended in the business in a midst of an environment where consumers don't necessarily have the income to buy things like Funko Pops and collect, right? So that's the sentiment on it. And analysts did ask a few of these tough questions that were kind of brought up here in the Reddit about overproduction and about where they think they're going and the top priorities. So a Goldman Sachs analyst asked the CEO, Josh Simon, about the top priorities for the next 12 months. And he basically said that they need to operationalize trend sensing. So they're trying to do that with Sabrina Carpenter, who's exploded in the last few years. They're trying to get on top of these trends earlier to unlock the growth, because they're in the hype business. They need to pick the right partners to partner with, and this will allow them to open up new customers that maybe not would have bought if they just partner with the right brands and accelerate these product launches. Another Goldman Sachs analyst asked about their retail stocking patterns heading into Q4, and the CFO basically said that they are going to be very cautious about United States retail. They're finding stronger momentum in Europe and other channels, and you can kind of see this in their financials. They have, I don't know if it was revenue or income, but they were down in the United States, but they were mostly flat in Europe. So they're kind of exploring Europe and other international things to expand into and to focus on amidst some of these tariff-related uncertainties and other things. But getting into more of the questions here, they asked about, the price increases, right? I mentioned at the start of this video where they're kind of increasing the prices amidst this U.S. demand that's kind of staggering, and CEO said that unit sales remained within expectations and that price increases were fully absorbed. So despite the price increases, at least from the CEO's perspective, that the customers are not sensitive to that price increase, at least yet so far, So I would say that's good to see, but I'm not convinced on their plan here, because if you look at the Pop Yourself, this is pretty much where you can make a Funko Pop of yourself, and you can click Get Started here. I don't know where it'll take me, but you can take a selfie, upload a photo, or anything like that, which could be interesting. I'm not sure this is, judging off of some of the Reddit comments, I'm not sure if this is what's going to get them out of their hole, but it could be a one-time spike in sales for these people that are passionate or think this is cool. So kind of getting into, is this a pass or a buy? This is here stock story on Yahoo Finance saying they are passing on Funko Pop because, one, the sales are declining, right? We talked about that annually, year over year. They're getting eroding returns on their capital from an already low base, and they basically say management's recent investments are destroying value, and they have the high net debt to EBITDA ratio of 7x, which could force the company to raise capital at unfavorable terms. So if that happens, they are already in hundreds of millions of dollars of debt, and if they're forced to kind of raise capital again to just keep the company afloat, I think it could be very bad for Funko Pop. And for these reasons, they're passing on Funko Pop. So you do look at the stock chart here, and this is on the weekly time frame. Kind of in 2022, despite kind of some of the market conditions in that year, I remember it being a kind of slow year for growth. They did make it up to about $27 a share, but since then they haven't really been able to find their footing. You can see in Q4 of last year they tested the 200 simple moving average, and they couldn't break out of that right here, that's very bearish on the company. And since then, they had a small earnings spike when the earnings kind of came out, but they're kind of giving up those gains now, and it's testing the weekly 9 EMA here, and it hasn't really been able to break out. You can see last week it did, but now it's down and falling below that. So that's the stock chart for Funko. Let me know in the comments what you think. And I do send out a newsletter every single day with 3 actionable stock ideas from the top investors around the internet, from YouTube videos, podcast newsletters. And if you want to receive that, click the first link in the description, enter your email to get on the list and get the next issue that will be coming out. And make sure to like, comment, and subscribe, and I'll see you in the next video.